Time for another stock review, this time AMD. We're looking at AMD now, and we're going to share with you some very important information. We're going to cover, of course, the profitability score, the debt position, the inside trading, latest news, who's buying, who's selling. We're also going to bring you, have a look at the website, investor relations. We're also going to do a back test. A back test as well, comparing it to the S&P. In my review, you're going to have a profitability score, a solvency score. You're going to see the balance sheet, allowing you the opportunity to make an informed decision whether you should buy this stock or not. We have done over 60 reviews now. Many of my reviews, nearly all of them, identified the bottom of a stock and identified a short position. Many of them have made lots of money for my members. I provide this as a free service. No one sponsors me to make these videos. No one pays me to make these videos. I do them. However, if a member wants a review and wants it done immediately, they might give me a super chat, but I'm not in any way paid to do this. I just do it for my members. They don't have to super chat me at all, but I can only do so many. Okay, I've done 60 in the last, month and a half. All of these reviews will then later on appear on Alpha Spread, which is what I use to study the stocks. It's the most advanced algorithmic software. Why do I use that? Because it's not influenced by people's opinions. It's not influenced by an analyst who's paid to say one thing. Motley Fool, for example, they're paid to manipulate stock. Ridiculous. I don't do that. I'm here to provide the honest, real information based upon numbers and numbers alone. And that is it. So that's how I come to the conclusions of these reviews. It's a well-balanced review. So there you go. That's how you do it. Click subscribe and ring the bell and tap the like button if you like this review. We're going to start right now. Now, we start nice and basic, and we get more and more deep as we go. Some people only watch the first few minutes and say, oh, he was looking at a basic line chart. That's the sort of person who likes to gamble, who doesn't want to spend 10, 15 minutes looking at the whole video. So let's get straight into it. What is AMD? And let's look at the basic line chart first of all. Here we can see AMD, how it looks on the basic line chart over its maximum period. And as we can see, AMD, what is it? Advanced Micro Devices. Gauges in the provision of semiconductor businesses. It operates with the following segments: computing and graphics, and enterprise, embedded and semi-custom. The computing and graphics segment includes desktop and notebook processors and chipsets, discrete and integrated graphics, processing units, data center and professional GPUs, and development services. The enterprise, embedded and semi-custom segment includes server and embedded processors, semiconductor systems on chip products, development services and technology for games consoles. The company was founded by W.J. Sanders III on May the 1st, 1969, which was the year that I was born. So it's got to be a great company, right? And is headquartered in Santa Clara, California. The listed name is AMD, Advanced Micro Devices. The CEO is Lisa T. Su and employs 25,000 employees, not 25,001, 25,000. Sometimes I often wonder when they have these exact numbers, was there a reason behind it? Anyway, as you can see, AMD recently has exploded. Let's understand why that might be. Well, it's not just about graphics cards and gaming consoles anymore. It's all to do with the EV explosion, AI explosion, of course, so all of that, and also crypto mining, all of this stuff is heavily involved with this technology. Also, self-driving cars, all of this. So that's why the company has exploded. However, no matter how good this company might be and how high its share price is, we got to remember where it came from, and are we overpaying? Because we are investors here. Just a few years ago, the stock was $5. Look at it. $2, $3. Okay? And it's just going up and up and up and up and up and up. But that doesn't mean to say we're going to buy it. I like a can of Coke, but a can of Coke is worth $1. It's not worth $1,000. Maybe if it was the last can of Coke on planet Earth, I might pay $1,000, but I'm an investor, not a gambler. So when I buy a company, I am looking for a company that has a great growth going forward from where I am buying it. It's undervalued. It's had a hard time, whatever. I'm not jumping on the bandwagon because I have detected over nearly 3 years of doing this. If you focus on not losing money, you will make money. If you focus on making money, like a gambler, always chasing everything, 95% of day traders lose money. Overall, you will lose money. You'll tell everybody, I made loads of money on Tesla and I know what I'm doing. You'll tell everybody you made money on Bitcoin. I know what I'm doing. In reality, you got lucky a few times, but you'll never tell anybody about the times you lost. So how I consistently beat the market, how I consistently make money is because I opt for not losing money. Then thereby, when I make money, it's 10 times better because I didn't have to offset against the losses. I hold cash earning 5.25% plus my investment. So let's look at the value, look at the entry point. Remember, it's not timing the market, it's time in, but we have to find the value. Remember, own the casino, don't play the casino. By the way, I made that up a couple of days ago. If anyone's going, is that some sort of catchphrase from somewhere? No, I made it up a couple of days ago and I like it. It makes sense to me. Hope it does to you. All right, now then, if we're buying it on margin, it's a 25% maintenance requirement. In other words, it's regarded by this brokerage as a low risk for margin. Doesn't mean there's no risk, but it's regarded as low risk. Okay, average volume in 98 million. Now, volume is important. Volume is liquidity, which means you can get in, you can get out. If a stock has a very low volume, you might want to sell it, but no one is prepared to pay the price that you want to sell it for. Thereby, you can be stuck in a stock. So you want a stock with good volume. If a stock has no volume, you end up being stuck in it. Remember, every time somebody sells, somebody's buying. So high volume is good. Today's volume is below average. It's 10:39 in the morning. It's going to be a below average volume today. No dividend. Remember, dividend paying stocks might have a dividend, but then they have maybe a slow growth or negative growth. This is not about that. This is a growth stock. Maybe one day it will be a dividend stock to retain its investors, but right now it's all about the growth, the S-curve. 1.41 thousand. I don't think I have ever in my life seen a price to earnings ratio like that. This is the first time I've reviewed it. 1.41 thousand price to earnings ratio. In other words, and we'll come on to it in a minute, it's bloody expensive. It's overpriced. Now, we cannot run forever. Stocks cannot run forever. And those that chase a stock ultimately will lose their money. 95% of people, day traders, lose money. So are you smarter than everybody else? Do you have more information than Wall Street? I doubt it. I doubt it. This is very, very expensive. Now, it's okay to overpay for our high value stock if it'll grow in the future, continue, and then it grows into the price that you've paid. Fair enough. But if everyone keeps buying a stock for the hell of it and it gets overbought, then you're just buying nothing. You're buying the fame, you're buying the trend. And I think that's a very bad way to invest my money. I don't care what you think. That's bonkers. Anyway, we will see if this valuation is supported by its balance sheet in a minute. We'll have a look at that. Low today, 179. 52-week low, 72. So 52-week low, 72. So we can see how it's gone up enormously over the last 52 weeks. Anyway, 52-week high, 184. High today, 184. All right, okay. Let's see now who we are in bed with. Let's see who else is buying the stock. Now, first of all, we've got analyst ratings here. Morningstar, rubbish. They are paid influencers, all right? They are incentivized, they are paid, they earn money to review stocks. I do it for free. That's like the flipping ridiculous, stupid thing they have in America called the J.D. Power Awards. I cannot believe they're allowed to exist. J.D. Power is a marketing company paid by the car manufacturer to give me an award and tell me I'm the greatest car in the world. And people love it. They go, hey, it's got the J.D. Power, the best car in the world. I'm going to buy it. It's absolutely flipping ridiculous. I would never in my life employ anyone like J.D. Power to tell me I'm the greatest YouTuber in the world. What a flipping ridiculous thing. Morningstar is not, in my opinion, a very reliable analyst team. They're saying it's a strong buy, which it might well be, but they're paid to say it. All right. Anyway, AI offers a massive opportunity for GPU makers. And while AMD lags industry leader NVIDIA, we see plenty of room in the AI market for GPU alternatives such as AMD products. Now, it's fair to say with the growth that we've got now in this sector, maybe NVIDIA, one company all by themselves, cannot supply demand. I think that's true. I think Tesla, Elon Musk has said that. Elon Musk can't supply everybody with electric cars, so neither can NVIDIA. So AMD have a role. AMD's gaming section custom chip business is beholden to the design cycles and launches of new gaming consoles, and it might be a couple of more years until the next generation consoles. That is the bears. Now they're right, because people are overpaying for the future of the next gaming consoles. Now, you could argue, have we not reached a peak with gaming consoles? They look pretty realistic to me. I'm not a gamer, don't have a go at me, but I'm just saying that gaming consoles, in my opinion, from what I have seen, as a non-gamer, and I'm sure everybody will have a go at me, don't seem to change anymore now. The realism is so real, it just gets the same real. It doesn't look much better. Do we need even better game consoles, or can you enjoy a good game of chess which requires no technology whatsoever? Will it keep getting better? Will it keep growing? I don't know. Well, as we can see here, this for me tells you everything you need to know without doing any more of the review, but we haven't even started yet. Look at the earnings. Look at the earnings. What do we see here? We see Wall Street for the first time that I've done any review, and I've done about 60 reviews, Wall Street are hitting it right on the head. That is extremely rare, right? Wall Street are normally rubbish at analyzing stocks. They're all over the place. They're not investors, they're traders. And they just, whatever. They look at the numbers and they guess. And they're very often they're miles off. They've done this spot on. However, what do I see here? A profitable company, no doubt, but earnings going sideways. Why are we paying more and more for a company that is going sideways? Does anyone know? Has anyone got a suggestion why I would want to pay more and more and more for a company that seems to make the same amount of money every quarter? I don't know. That's not good for me. That makes no sense. We've seen Tesla earnings go down and their share price has gone down, but AMD is flying up and it's just going sideways. I don't get that. Anyway, who's buying the stock? NVIDIA, of course, makes sense. That's the competition. Microsoft, of course, competition. Intel, not really any competition there. Taiwan Semiconductor, I like that one. Meta, Apple, all the mega caps. So what does this tell me? This tells me that we're not in bed with gamblers and Mullins and rubbish and Lucid and rubbish stocks like that, which is good. So we don't have any ridiculous gamblers in here, which is good. Okay, so we don't have the silly volatility of gamblers on Robinhood who just buy every penny stock under the sun. That's good. However, what we do have is tech mega caps. Apple, Meta, Microsoft, Nvidia, you see it. Now, what that means is we have people that buy the S&P like me, but people that buy it at any price, not like me. Okay, so which means even though we don't have the crazy nonsense of gamblers, what we do have people buying who think the stock can go up forever and ever and ever. And that is a very dangerous way to invest. It's not investing at all. It's following the leader like a bloody lemon over a cliff. And you'll never get me do that. That's ridiculous. Anyway, let's now go into some numbers. Let's actually find out what the value of the company is, what the balance sheet is, do they own debt, what's the inside trading, and so on and so forth. Before we do that, though, I think you should tap the like button because I've done a bloody good job. I'm doing it for free, so why wouldn't you tap the like button, all right? There you go. And also subscribe to the channel. Make sure that you ring the bell, otherwise you'll miss the breaking news. Okay. Before we look at the numbers, briefly, let's go into the website. I don't think we need to do too much here. We all now know what AMD does. There's not a lot to learn. Well, there's plenty of stuff to learn, but we don't want to waste your valuable time. You're going through the website. We all know what this company is and what it does. All right? Okay. But we do want to know about the latest news, though, however. Latest news just out. AMD reveals next generation desktop processors for extreme PC gaming and creator performance. It gets even faster. The graphics get even better. Does it need to? I personally couldn't care less about that. What I care about is the flying cars. They're coming. Flying, self-driving cars, robo-taxis, AI explosion. We need the technology. Gaming is just a extra little bonus. It doesn't really interest me, but nevertheless, it's latest news, and of course, it makes the money, so we need to talk about it. Just the first paragraph, AMD, Las Vegas, CES, of course, that's where it all goes on, announced new products expanding its desktop portfolio, delivering premium experiences for gamers, content creators, and everyday users. Now, we don't want to discredit gamers, even though I'm not a gamer, obviously. I'm far too old for that. There are more people who are online gamers who watch online gaming than the NFL and the NBA combined. So let's not discredit the power of online gaming. It's huge, absolutely massive. So it's a huge business to be in, and it's good that they are. All right. AMD is introducing a new AMD Ryzen 8000G series desktop processors for the AM5 platform, including the Ryzen 7 8700G with the world's most powerful built-in graphics. AMD is also bringing the power of dedicated AI neural processing unit to desktop PC processors for the first time, and the introduction of Ryzen AI to unlock more AI capabilities for consumer and improve productivity, efficiency, and advanced collaboration. So this is great, fantastic. This is all good news for AMD. Let's now go into what really matters. This is good news, increased revenue, but let's look now at the numbers, and then we'll do a full back test. All right, let's start with valuations. Are you ready? Get ready to get scared now. Valuations. Base case scenario, 42% overvalued. Now, the golden rule, and I stick to it, don't care what you say, I will pay overvaluation of no more than 25%. If a stock is overvalued by 25%, but it has huge upside, huge potential, huge growth, I will do it because everybody will overbuy it. So up to 25% I'll do because, we expect, 10 to 15% a year on the S&P. So it's a high growth stock, could do 20% a year. So a couple of years, get money back. All right. But 42% on the base case. Best case scenario, 17% overvaluation. But are we in a best case scenario? Are we in a best case scenario? High interest rates, macro conditions, wars, so on and so forth. I don't know if we're in a best case scenario, but maybe for a chip company, we possibly could be. Interest rates are going to come down, huge explosion there. But anyway, let's let's say base case, 42%, too expensive. It is simply too expensive. Worst case scenario, 58%. I can't buy a stock with 3 years of growth built in. What is the point of that? I could have my money in the S&P and earn 10%, and I'm at the right valuation. It cannot make sense to me to overpay that much. Anyway, is there a warning? No, there is no warning. I say that because we could have an intrinsic value warning. Now, many people, we've done polls on this, will buy a stock based upon that and that alone. They will go, right, intrinsic value 42%. Oh, okay, it's a bit over expensive, but I'll buy it. It's not enough. We need to go further in. So let's go further in. Okay. Our AI picks up the latest information from the earnings and puts this together for us. This is what they said. This is what they said from their earnings. The company reported a 4% year-over-year increase in revenue. 4%! Brilliant. So why is the stock like doubling every 5 minutes? All right? 4%. I mean, right? This is why we do the earnings. This is why we cover the earnings. A company reported a 4% year-over-year increase in revenue to 5.8 billion with a slight rise in gross margin to 51%. Now, of course, companies like this have very good margins, very, very profitable companies. It's a software company, right? Technically. So you make money from these kind of companies. It's not a car company. Traditional car companies can make no money on their cars. They make money from servicing. Of course, Tesla has changed all of that. But nevertheless, they do very good. Profits are great. Diluted EPS improved marginally from 0.67 to 0.7. A slight increase, despite a 5% decline in the embedded segment to 1.2 billion due to customers adjusting inventory levels. The forecast for Q4 suggests a revenue of about 6.1 billion, marking a 9% year-over-year rise. 9%. Very, very good. Very, very good. However, does the stock price justify that? No, it doesn't. Anyway, let's move along. Let's look at the revenue now. The revenue, 22.1 billion. It's up 1% on the most recent range. 1% on the most recent range. And we are expecting things to increase. But this isn't really an S-curve. This was the S-curve. Now we're flattening out. Will the stock price justify the revenue? No. So far, no, not for me. Operating income, up 70%. That's because of capital expenditure. We'll talk about that in a moment. Operating income dropped in 23, and now we're seeing June 30th, 23, negative, as you can see, and then September 29th, 23, negative, and estimated. This is what we're estimating. Now, we haven't had the earnings. Let me check what date the earnings is for AMD. Let me scroll down here and have a look. January the 30th, after hours. Let me share with you on the screen. This is the earnings. We're expecting a fantastic earnings, beating all-time records. Will that happen? Well, in the past, we always beat earnings. What if we don't? The share price will plummet. Even if we beat earnings with a share price so high, it will probably drop because people will go, hang on a minute, it's not what I expected going forward. We don't know. If I was buying AMD, I'd be watching the earnings very closely, and that's how I would buy AMD, on the earnings. Because no matter how good it is, there's always going to be a drop on the earnings. There's always going to be, because somebody will take profit and somebody will say it's not enough, and somebody will say the ongoing numbers don't, substantiate the price and go, I'm taking money out of this. So I would wait to see. Anyway, you will do what you will do. So back to the operating income. We're expecting a huge rise. I can't see it, but who knows? Who knows? Net income also expected to explode. All right, could be good, right? Free cash flow at negative 29%, but we're expecting it to massively go up and then fall away, interestingly. But, that's hang on a minute. Yeah, that's 29. Sorry, I beg your pardon. It has been falling away. We don't have a free cash flow estimation. There we go. Now, capital expenditure. We've been spending money. Now, that's okay. We've been using our money. We're investing it in AI and in new technologies. That's what these companies do. All right. And we're starting to level out now. It looks like, anyway. Looks like we're leveling out, which is always, obviously, if we can then stop spending money for a while and make a profit, then that's always good. All right. Operating cash flow, you can see, is negative -23 on the most recent range, September 29th. We have yet to get the numbers. We will soon. Right, the balance sheet. I did a poll on my show, and 80% of people never read the balance sheet. Amazing, right? I bet 80% of the people that buy AMD never read the balance sheet, never do a review, don't care, just buy it because it's cool, right? Well, that's not how I do things. 67.6 billion in assets, 5.8 billion in cash. Nice. We have some cash. What about long-term debt? 1.7 billion out of 12. Great balance sheet. Assets, liabilities, good, negative, right? Liabilities are 12 billion, which is a small part of our liabilities, okay? If we had more liabilities than asset, it would be a bad balance sheet. If it was near the same, it'd be a bad balance sheet. It's not. It's a good balance sheet, this. It does have some long-term debt. However, it does have more cash than debt. In other words, it could pay all its debt off tomorrow, which is great. This is great. They won't do that because they earn more money holding the cash and investing it than they do paying the debts. So long-term debt is 13.5%. There's your long-term debt. Long-term debt. All right. It's 13.5% of the pie of the liabilities. Easily affordable, interest rates coming down, major catalyst, but they don't have massive amounts of debt. It's easily payable. So don't expect when rates come down for their profits to rally because their debts is already manageable. A company that's got massive amounts of debt, then the rates come down, that can be a catalyst for them. This wouldn't be a catalyst for AMD. I mean, it will, but not massively because their debts are manageable. Right, the margins, gross margins. Now, what you have to do here is look at the gross margins and go, great, 45% gross margin. However, you've got to compare it to the competition. Because NVIDIA might have a gross margin of 99%. I don't know. I've not reviewed it. You need to go and compare. And I'm going to give you the link in a minute. Using my software, you can access all of this and in more detail for free. And I'm going to give you that in a minute. You can do that and you can see if NVIDIA has a better balance sheet, has a better intrinsic value, has a better margin, and then you can decide which is the better option. It's very simple, really. Very, very simple. Anyway, net margin, however, 1%, a little bit different. And as you can see there, all right. Everything good. Right, fundamental score. Obviously, very, very good. Exceptional 3-year growth, exceptional 3-year average ROIC, exceptional 3-year revenue growth, positive gross profit, 60 is a profitability score, 60%. Very nice indeed, very good profits. Again, is NVIDIA making more? I'm not going to share it on the screen. You can go and do your own. Research on that. Otherwise, this video will be 3 hours long. AMD solvency score, as I said, debt very, very manageable. Now, I'm seeing this for the first time with you, so it's good that I was right? I didn't see that. I scrolled down and there it is. I said it would be good because their debts are manageable, 13% long-term debt, and they've got more cash. So, of course, their solvency score is going to be excellent. Doesn't get much higher than that. I mean, you'd have to have no debt at all and just 100% profit. I mean, you know, you're not going to get much better than that. This company is not going bust. It's never going bust, at least for the next million years. Very, very good. Great business. Good. Is it expensive? You bet you expensive. But you got to buy it at the right price, right? And here it kind of sums it all up, really. Worst case scenario, Wall Street, 67% downside. Wall Street analysis, a target, 18% on the average downside. Too expensive. See what I mean? 16%, well, you get 10, 15% on the S&P without the risk and still have the exposure to it. So to me, it's obvious. To me, I would not buy this. It's a great company, no doubt about it, but a lot of gamblers just buying it. They just buy at any price, like they bought Tesla at any price. No one cares. They just keep buying it, thinking it will go up forever. Well, the insiders, those that don't agree with you. Those of you, those that work at the company are not gambling. They're taking profits. Thank you very much indeed. Keep buying our stock and we'll keep selling it. There you go. I think I've made my case very clear here. Why the stock's going up? We know, because people will buy anything. People will buy stuff that goes up because it's sexy, it's rock and roll, and they don't care what the balance sheet says. Well, those people will always lose money. I guarantee my portfolio will be $1 million one day on this show, and consistently making profit, consistently not losing money. And I am not going to go out today and buy myself a load of AMD because it would be flipping bonkers when even those that work there are selling it. Even those that work there who know more than me, they're selling it. Anyway, scrolling on down. And here's what's interesting. Despite all of that, no one's really shorting it. 3%. Now, let's get that in context. Under 1% is like Apple. No one shorts Apple. It's like, I think, 0.7%. There is some short interest. There's always, what the hell? It's overpriced. Let's short it. But even those gamblers, and the gamblers are the shorters, even they're not shorting it. They're buying it as well. It's like everyone's buying it. It's like number one fan club. If we had a massive short interest over 20% and the volume is high, then potentially, who knows, we could have a short squeeze. We're not going to have a short squeeze because no one's shorting it. So even the shorters are buying this. So we've got everyone buying it. What can I say? And when everyone's buying everything, then I'm not buying it because that's flipping bonkers. Anyway, let's hear from the analyst. These analysts are all on TV. They're all paid to talk about it. I do it for free. They've all got incentives. They may not disclose their position. I will disclose my position. I do not own it other than on the S&P. I own the S&P. And anyway, let's have a listen in and see what the analysts have to say about this.
U.S. semi analyst Stacey Raskin. Stacey, great to have you with us.
Good to be here.
Does this run make you nervous going into earnings season?
Look, I guess anytime you go into earnings, you prefer expectations to be lower rather than higher, and I think
Correct.
Expectations clearly are going up.
Correct.
Some of it's also the general cyclical behavior. Like you have to remember this cycle's been unusual. Last year was a downturn. Semis were down. The stocks were great, right? But the revenues were down. This year, revenues will grow broadly for semis. Things like PCs and smartphones, which drive probably 50% of semiconductor demand overall. They've kind of bottomed. They've hit bottom. And people are looking at least for those end markets to grow some this year. AI is clearly off the charts, as you were talking about. I think there's some nervousness in some sense around some of the lagging edge stuff, automotive and industrial. And those are end markets that probably are not going to do so well this year from a revenue standpoint. But for a lot of the companies, they've already cut. And you get this sort of weird dynamic in semiconductors when people tend to want to buy earnings cuts. They like if they're confident that things have bottomed. Now that's a debate. Have numbers been cut enough? But in general, people have been buying some of these names on sort of the cyclical bottoming things. So you kind of been winning in all ways across semis as we go into earnings. And now, the rubble will hit the road, I guess, like as we start out next week and some of these prints start to come through, and we'll see where the chips land, I guess.
So as you can see, he's saying about going to earnings season, which we're about to. I wouldn't be buying this. I think it's bonkers. Anyway, there we go. Let's go on down. Sentiment of the stock. Now let's look at the sentiment around the stock. Last 90 days, pretty much all positive. 30 days. Only 7% negative, getting smaller. Last 6 days, a bit more negative, 9% now. And today, negative is 14%. It's growing. It's getting ready. It's getting ready for earnings. All the numbers will start coming out and people will go, whoa, whoa, whoa. Why have we paid so much money for this? Be very, very careful. Anyway, there you go. There is my review. Now we've got the back test. Very, very important. Long-term investing is what it's all about. That's what I'm all about. Let's go and have a look at this. Long term. Here we go. If I put $10,000 in the S&P and in AMD back in 2011, I would have 5x right now on my S&P. I would have made 48 grand, just under 5x. Wonderful stuff. Great. Can't be wrong with that. However, I would have $180,000 on $10,000. What a markup that is. So if I'd bought $10,000 in 2011 of AMD, I would now be knocking on the door of 180 grand. Well, of course, that's good. Of course, that's good. Fantastic. However, is it the time to buy it? This is at the end of the day, we are analyzing a stock from the point of view of, is it a buy today? Well, there's my review. I hope you like it. I hope you've tapped the like button. I hope you've subscribed to the channel. It really does help. My opinion is no, I cannot buy AMD. It's too expensive. I'm not in any position anyway, so I'm completely unbiased and I'm fair and open and about the stock. I don't pump or dump anything, as I don't own anything, but I do own the S&P. All of my money is in the S&P. I am waiting to see what happens on Fed Jerome Powell's speech. I expect it to be a non-event. I will cover it live. Links above my head and down in the description. I will also cover the AMD earnings if requested by my members. Links above my head, down in the description. And I will be looking for when Google and Microsoft and AMD all report in a few days' time. Massive amounts of volatility. I've got $100,000 waiting to buy. Here's my portfolio, consistently making money. There it is, $99,000 of my hard-earned money ready to buy the S&P, just under 100 grand. To buy the S&P when we get the volatility all around AMD, Google, Microsoft, and all the rest of it. That's my prediction. So my thoughts are, no, it's not a buy. Absolutely not a buy, because I am an investor, not a gambler. I set my own trends. I set my own path. I'm not following the leader. Is AI the future? Of course it is. Is AMD a great company? Of course it is. Is it overpriced? Of course it is. If you want a review, it's free. I'll do it for any of my members, completely free of charge. If you want it to go to the very top of the list, give me a super chat and I'll do it. And if you really want it done the same day, give me a decent super chat and I'll work after hours and I'll make your video for you. All right, click above my head or down below. Over here, I'll put more videos and things you might find interesting. Over 60 reviews now. Go and check them out. We've identified many bottoms of the stocks. Many of my members have made lots of money, 48, 50% profits all over the place because we are looking for value and we're not following people on YouTube trying to sell videos. I am live. I make these videos live. I don't make money from a live video because I want it to be real and I want it to be seen to be real. I want you to know it's real, and I'm not in the stock either. So you know it's real. No one pays me or sponsors me to say these things. I'm doing it to build the most honest YouTube channel, TV channel in the world. Until next time, as always, take care of yourselves and each other.